This week on Moving Markets, Negara Malaysia maintained its key policy rate at 1.75%. Why is Grab listing on the other side of the world? US banks provide a sign of optimism for economic growth. And China became the sole major economy to expand in 2020. On Wednesday, Bank Negara Malaysia maintained the overnight policy rate at the all-time low of 1.75%. But with the movement control order and elevated numbers of COVID-19 cases across the country, many economists had actually expected a rate cut to boost the economy. However, the central bank says the impact of the current MCO will be more muted than the last. It also expects economic growth to pick up from the second quarter, especially as vaccines start to be rolled out. Besides the vaccine optimism, the central bank likely took a less heavy-handed approach, since it had already cut the OPR by 125 basis points since the start of the pandemic. Plus, the government did introduce more fiscal support this week via the PMI assistance package. Now, while PMI does not include much additional funds, it does improve and accelerate existing measures like wage subsidies and tax relief, which puts less pressure on Bank Negara to adjust its monetary policy to support growth. However, the market does seem to be penciling in one rate cut in the first half of this year. But that will depend on how the economy performs. We'll have a clearer indication when the fourth quarter GDP numbers are released next month. Amidst a boom for tech, Grab is reportedly listing in the United States. A source told Reuters that Grab's IPO could raise at least $2 billion. And though we don't yet have all the specifics of when or how big the listing will be, if the company does list, it would be the largest overseas share offering by a Southeast Asian company. Stocks of tech services like food delivery and mobile payments have been the big winners in the wake of COVID-19. So this could be good timing for Grab to make a public debut. After all, DoorDash, the US food delivery company which listed in December, is up by about 90% from its IPO price, despite inconsistent earnings. One question remains though. Why would the Southeast Asian tech unicorn choose to list in the US over Singapore or Hong Kong? Could a US listing facilitate greater interest from institutional investors? Or perhaps fetch greater valuations? The biggest banks on Wall Street reported earnings this week, and it was a tale of opposites. Commercial banks like Bank of America and Wells Fargo reported weak earnings, while the investment banks enjoy record profits. In the fourth quarter of 2020, JP Morgan reported a 42% increase in profit from a year ago, whereas Goldman Sachs' profits soared by a whopping 135%. The reality is, banks that rely less on Main Street are better suited to weather the coronavirus crisis. On the other hand, the pandemic year has seen a deluge of fundraising and trading volumes, which benefit the investment banks. It's worth noting, though, that banks are releasing billions of dollars in loan loss reserves, which had been set aside in the early days of COVID-19 as a capital buffer. A sign of optimism about economic recovery. China was the only major economy to grow last year. It expanded by 2.3% in 2020, the lowest in 40 years, but a feat considering all other G20 countries recorded contractions in this pandemic era. China's economic performance matters because it's a key engine of growth for Asia. Any acceleration in the Chinese economy is sure to drive an increase in demand for Malaysian exports, as China is our largest trading partner. But can China alone drive growth in this region when it faces structural issues like rising inequality, slowing domestic demand, and rising corporate debt? Still, China's stellar economic growth in 2020 has led analysts to project that it will overtake the US as the world's largest economy by the end of the decade. And that's what's been moving markets.